Howdy everybody, Brian here from quantlabs.net. So it's been a while since I've put up a video, 3 days. People seem to be freaking out over that. Okay, so today's Monday, September 17th. Let me show you. Now, first thing, if you've not watched this video, cryptocurrency risk on, risk off is becoming a very, very important utility that I'm using to measure risk in the markets. It's cryptocurrency. Let me just give you a summary here. Very important. Okay. Okay. So what I've got here is I have my strategy running in the background. Got the usual Redis server, all that you should know about by now. But I have here this risk on utility I've written. So I have changed the results of this risk on second iteration. You can see here, this is what it's reporting. The cryptocurrency pairs are the same, or not pairs, but they're a coin. The big ones: Bitcoin, Bitcoin Cash, Litecoin, Ethereum Classic, and Ethereum against all U.S. dollar. It's using Coinbase, I believe, and what I've changed is now the percentages of moves over the last 6 hours. A couple of reasons for that. I find the regression analysis I was using was pretty useless. It's lagging. It's not as good as I've always been using rate of change, using hourly data, so it just does a rate of change over the last 6 hours. The reason I use 6 hours is because the market regime, in terms of when you look at, like, let's say coin market cap here, you'll notice here everything seems to work in combination. So obviously these are the top 100 coins. You can see everything is nothing but, again, blood on the streets for the top 100 cryptocurrencies. So here on the 24-hour change. But these 24-hour change is kind of useless because, again, that lags as well. And again, it seems when I've been heavily analyzing things, like my debugging the logs, the regime switches on average every 6 hours, but it will switch. Another thing that you need to consider are the moves of each percentage. You can clearly see here that Bitcoin is barely profitable. Bitcoin Cash is doing quite a bit better, but against Ethereum and Ethereum Classic are not doing all that well. They're not just moving as much. And I just did a check on the volume on coin market cap, and it looks like Tether is now number 2, not Ethereum, because it's been dropping. Okay, so there's that to keep in mind. So, wow, what else can I show? Okay, let's talk about Coinbase. I have looked at Coinbase, and I will tell you that. So I've written my entire system using, thankfully, CCXT. Python package. I'm able to transform or basically swap out the exchange I'm using from, let's say, Binance to, in this case, Coinbase Pro. When you look at the market cap of the exchanges, this is really, really important as well. If I looked at the top 100 adjusted volume, I don't know how they do this, but this is the adjusted, you'll see that Coinbase Pro is number 14. That's pretty useless. The other problem is that they only have five cryptocurrencies, which I showed you earlier, which these are coming from. These pairs, or these coins are coming from Coinbase Pro. I'm always getting my coin market cap and Coinbase Pro confused. So that's where they come from. And that's all you get right now on September 17th. They're talking about adding more, but I find that those are pretty well useless. Because when you are in this kind of market where the cryptocurrencies are really badly down, as you can tell today, let me just see if there's any profitable ones in the top 100. I think I've only seen one that's profitable, 2, 3, 4, 5. So only 5 out of 100 are profitable on the top 100. So that is another big key. So when you move into these scripts that I developed to transform from watching Binance and trading on Binance into Coinbase, using Coinbase Pro is pretty well useless at this point. The volume's too low, and the selection of coins are way too limited. But the big factor is if, as in this case, where the whole market's down for cryptocurrency, this strategy using Coinbase Pro will be useless because everything's down and you cannot trade in a falling knife kind of market. So that's factor number one. So we got this thing running. I'm going to show you my most recent set of strategies here. So hopefully you've seen this spreadsheet that my system can. Okay, let me just show you something as well. Okay, so I've got this P&L, which I've shown before in a past video. There's no positions on right now, okay? Let me just see if I have the old file. I don't think I do. Yeah, so this would be the typical file. Oh, I do. Okay, so this is my previous session. Let me just make sure I copy this to another spreadsheet if I don't lose it, which I don't want. So let's call this position. Let's call this position exit September 17th XLS, or leave it at that. Okay, so here's a couple things we want you to note. First of all, in order to have a really profitable strategy, you need to have volume is really important. If you're checking cryptocurrency pairs in a down market, you will get a lot of unprofitable positions. When you have volume in an up market where your risk is much higher and it's in your favor, volume will also be a factor. I say that because you want to only take on obviously profitable positions. So here, the key factors is what we call a rate of change percentage. So everything I do is now converted into percentages. Very easy to visualize instead of in the Forex world, let's say, where it's all pips and all this crap. It's percentage. That's what I'm after. So when it comes to trading, now this comes from the tips of the pros, the insiders that you'll never hear about. When it comes to your portfolio management, you want to make sure you set a daily move on your portfolio. So if you have a goal that you want to achieve on your portfolio, what you want to do, and remember this is crypto, meaning the markets never close in the world of crypto, which means you have to figure out what your daily target will be on the positive moves against your portfolio. So if you're after a 2% daily move, great. If you're after a 1% daily move, great. If you want to be super aggressive, you can set it at 4 or 3%. So in this case, when you look at these positions are displayed in order. This is what I typically see. You can see right up to this very last position here, we have two positions that have done pretty good. One at 2.64 and then the other at 1.13. Now, if you're really smart, what you want to do is you want this strategy to shut down to protect that profit for the day, or maybe for a period of time, be it 6-8 hours, like a traditional trading session if you're trading New York or Asia, where it's usually 8 hours. So you set that time, you got to figure that out based upon, again, the nuances, and you can only get that from debugging logs, okay? So you set that time frame or your daily target on the overall move positive, because you know what's going to happen? You're going to start to get these little moves against you. Fortunately, I was able to maintain for this session some profit, not a lot, obviously, but it's these little positions, these little losses that where it eats into this profit. So you want to protect that, and the only real way to do that is by shutting down your service, your strategy. Let it sit for 6-8 hours, and then, or maybe run it every hour, but only check on what I call the risk on, making sure that you hit a certain target of the market to make sure that the market looks really hot, and only trade those market conditions. And as I said, it's so volatile where you may get 1, 2 set of hours over a 24-hour period, maybe 3, 4 hours over a 24-hour period that you only want to trade in. Okay, so you want to set your percent moves at a certain percentage to make sure that it's safe to trade and that you will be able to get these kind of profit levels on these positions here. Okay, so again, I could say, okay, only trade when Bitcoin is at a 1% move and nothing else, because watching this stuff like I have been for the last, let's see, let me just see here. I will tell you when I started this whole process, which has been quite a while, and it's been one of the best learning practices that I've ever gone through. So when you see all the iteration that we're on our 11th iteration of this file, you can see when I started it. I've started this now July 16th, okay? And you can see all the change dates here, where since this time period, July 16th, mid-July, I've been spending hours upon hours upon hours looking at these debugging logs, okay? Debugging all these logs. So I know it, not great, but I'm pretty comfortable with making this statement. It changes on average every 6 hours. The other thing, key here is, this is one thing you need to factor in, okay? And you really need to make sure that your strategy and your parameters that you use are self-adapting. So again, if your market, in this case, I got here in my database, this new table here called risk, okay? So saying right now that only 4 of the 5 cryptocurrencies or crypto coins are profitable. And I know which ones those are just by running this new updated script. And obviously it's Bitcoin, USD. Actually, all of them are down now. So what will happen is we're definitely in a down market. So my risk will now, or the table, will have 0. So that means the risk is too high to take on any form of trades. So what my strategy as it runs here, it's now going to switch and it's going to self-adapt to this new market condition. Okay, so that new market condition will tell the strategy to throttle down and take less risky parameters against my indicators to make sure that the losses are less and tighten up the tolerances, as opposed to taking on a higher risk, increasing the threshold of the indicators so I can get a higher opportunity of profit, because the market condition says, yes, we now have a market condition where it's risk on based upon these returns that I'm getting from these big coins. Okay, so I can measure now that, or I can quantify that risk based upon the actual percentage of moves. As I said, if I have a Bitcoin at 1% or higher, I know it's real risk on, because everything follows Bitcoin. It's the highest, biggest coin out there of this whole cryptocurrency space, without a doubt. And then of course we have Ethereum, and then maybe Tether, which I'm not really measuring at all. So you got to factor these things in. And again, your strategy and your market, your parameters have to adjust to these market conditions, because what will happen is you'll get, as I shown you earlier, up until this point, you're making good money, okay, decent money, okay, but it's these last 4 positions that will eat into that profit for that trading session. So your best bet to protect it, shut down the strategy, wait it out, have your process waited out, or check the markets every hour, 2 hours, 6 hours, whatever it is, to see that the market now changes back where it's in an up momentum, has an upward momentum, and it basically meaning it's risk on. Okay, so there's that to keep in mind. Another factor that is really important is even if I was to factor out these last set of trades. Let me make another spreadsheet here. Now, what you need to remember is that I look at everything now on percentage. I don't care about anything else. It's very easy for me to visualize it. So here, what I'm going to do is I'm going to show you what the profit would be if I took out these last 4 positions, okay? So now you can see how the difference between the profitability is 1.23 versus 1.08, okay? You might not think that's a big deal, like 0.2% of a percentage. I will tell you something. Every day, if you get these kind of profits, the difference between 1.08 and 1.23 is going to be huge, especially when you scale up your weighting on your position sizes. And that will, like, you're going, let's say you were to deploy 100 grand every day, that percentage would be 20K a day. And you multiply that out over 7 days, over 52 weeks, it's big money. So you gotta be aware of this. So again, you want to shut down your strategy once you hit a certain level of profit. And again, the best way to do that, if you want my opinion, is this, the rate of percent. And here, let me just put, let me just do this again here. Okay, I'm gonna close this guy, create a new spreadsheet again. Okay, so if I take the summary of the percent moves, okay, and net them all out, let's see what it comes out to. I'll never get this right. Okay, so we got G9 and G2. Okay, so there we are. 1.08% net move on your portfolio with minimal, well, basically no position sizing, just one unit of each crypto pair. Okay, so that's okay. But when you factor out your this and actually this one and this one, you factor them all out, delete them, and again you can see again the percent of change is big. Okay, G2 to G5. Okay, yeah. So let me just fix this up here. Okay, so we can see here, oh, my word, this has got to be different. Okay, so you can see here, this is what I wanted to show, that the overall percent move for your portfolio is 3.7%. Okay, now if I took that out, okay, and did the same summary, let's see what it comes to. So we want F2 to F9. So we're still doing pretty good, 3.38% overall versus what was it before. So again, let me just take out these two. So yeah, you know, again, it's the same argument of those percent moves matter. So let me just take out this and this. Okay, so we're going to do summary, F1, sorry, F2 and F9. Okay, as usual, F2, wow, not doing too good here. Okay, it doesn't matter. Well, that doesn't really matter. Let me try one more time. So sum equals F2 to 5. Okay, so now you're at 3.75. And again, it comes back to this argument. What's the difference between 0.5 or 0.2? Again, that will be thousands upon thousands of dollars each and every day over time. So you want to figure out, what do you want your overall percent move be for the world of crypto against your total portfolio. In my case, I'd be happy with 2% each and every day. So my point is like, once you hit that 2% total, in this case I got lucky, it hit 3.76, shut down the strategy and start her up 24 hours later and be happy with that, and hope that you're making some positive profit profit tomorrow with the same goal, and just stop and then reset 24 hours later and hope you're going to get each and every day. So that's a really powerful option if you get too many money losing strategies, as you can see here that this risk is not doing too good, and this changes and gets recalculated every hour if I want it. So that's an important factor. Okay, so I may implement that into my overall scheduling, so it will total this column on the positions, and if it hits 2, shut down 24 hours later, start her up and hope you get another 2% that day, or maybe I might do 3%, because again, when you look at these logs, you quickly are trying to remove the fear and greed from a human trading perspective. So if you set a set of rules and just be happy with 2%, and you may get lucky and you may get 3.7% in this case, you go great, you shut down for a day and then come back at it. And if you make 2%, great, and you keep at it until you make that 2% move. And that's probably the best way to go about it. That's a tip I learned from probably some of the best traders in my mind in the world, because not a lot of traders talk about that. You know, you don't have to trade and have your system running 24 hours a day and make a certain goal or target and then continue trading for the rest of the day and then take on potential losses, or, as I showed earlier, eat into that target that you have achieved. Just shut down and let the system sleep and then start up again. But if you really wanted to do it, you could let the system check the markets every hour, every 3 hours, every 6 hours, whatever you want. And let's say you could set a goal of the potential risk. In my case, if I know of that hour that I'm checking, I'm seeing Bitcoin USD move 1%, then we have probably a very strong likelihood we have risk on mode, and then start up the strategy again and start trading again. If it takes too many losses, shut down and wait it out until the conditions get better again. So that's another factor that we can consider, because I'm going to be keeping my eye on these percentages for risk on, for pure risk on, which is another way of saying give me money. That's what the market's saying. And I always want you to remember that. So these are new perspectives. This risk on is very key now. Be able to get the percent moves. The system can kind of work. Oh, and before, one other thing I got to mention. These are trades, okay, that my system took on. You can see here the very first trade it took on was down 0.01%. When you listen to the word risk, that's what you're doing. You're taking a risk in the hope that you make a 1% move, a 2.64%. And that is okay to lose a little bit. You don't want to take on too many of these, like in this case where, you know, up until this point, everything looks good, even if you factor in this very small, tiny loss, or let alone, you know, it hits 0 and get out of the trade, because chances are, with the probability that I've seen, even in an up market, if that crypto coin, that coin is going to go down, it's going to go down, and it'll take a long time potentially to recover that. So why have your money tied up? Just take your lumps, close the trade, and end it, okay? And just close the position. Remove the emotion, okay? And if it's at zero or just barely here, and I will tell you, and I'll give you a hint, if you have a crypto pair that has a low volume, or let's say even no volume or insignificant volume, the moves on the downside can be extreme. And because the system's checking every minute on the open position, you can get the next minute bar where it will, just out of the blue, the next minute bar on an open position will just take a hit and be a hit and a loss of more than 1%. And you imagine that 1% will eat into your overall daily target move that you're after. So you don't want to take on those type of bad positions. So the moral of that story is try to focus on cryptocurrency pairs or crypto coins that have a very high volume. I'm going to let you figure that out, but the volume has to be certain enough, because I have noticed that the higher the volume that you're testing for, the higher likelihood you won't see those bad negative trades where you take on in a minute a 0.5% or a full percent loss. Okay, I haven't. It's hard for me to see that, but statistically, it's kind of, if you're checking for a certain volume, you'll be okay if you check for that volume. And again, because I have the ability to check on risk on, you could call it, I can change those percentages as well, and change the volume level as well for what it's checking for. And yeah, so I can adjust that as well based upon the market conditions. Okay, so yeah, so it might be wise to shut down after you hit a daily target move, and only you will know what you want in terms of what you want as a daily target move against your portfolio in terms of percent. If it's 1%, 2%, 4 or 5%, okay, and shut down your system, wait it out, and hope to see, again, the market condition change, where you see something like a big player like Bitcoin be moving at 1% or maybe 0.5% or 0.75%. Very important to be able to quantify it and measure, and have your strategy with the parameters and the indicators that you're using be able to assess and self-adapt to what the markets are telling you to readjust those parameters. It's key to protect your profit levels here, because up until this point the markets were hot, and after a while, you can see here 2 hours later the market started to turn against me, and it started to take on more losses. Okay, and the volumes didn't change, nothing didn't change, and these are the sort of patterns I look for every time I'm looking at these logs, and it's an important skill to have, be able to do that. And again, I had a little video up until Saturday. It's gone. I'm not going to talk about how we do that anymore. All right, so that's important. Just wanted to let you know how things are going, and it's looking pretty good if you know what to do. Talk to you later.